Hi, hello everyone. Welcome back to my channel. In this video, a problem is solved on set off and carry forward of losses. Kindly watch the video till the end, like it and share and subscribe the channel. If you have any comments about the video, please put your comments in the comment box. Now, let's move to the whiteboard. This is a problem on set off and carry forward of losses. The question is, let me stress this here. The following are the computed incomes of Mr. Jakanur for the previous year 2019-20. Income from let out property, LOP, rupees 1,50,000. Let me insert the symbol of rupee here. Next, B, loss from self-occupied property, that is SOP, rupees 75,000. Next, C, loss from SOP brought forward from previous year 2017-18. D, income from profession, rupees 2 lakhs. This amount I didn't tell. So rupees 90,000 here. 2 lakhs. Then E, unabsorbed depreciation brought forward from previous year 2014-15, rupees 50,000. Next, F, income from long-term capital asset, rupees 30,000. Loss from short-term capital asset, rupees 40,000. Winnings from lotteries, in the bracket gross, rupees 50,000. I, winnings from card games, in the bracket gross, rupees 20,000. J, loss from interest on securities, rupees 25,000. Next, K, dividend from Indian company, rupees 30,000. Next, L, bank charges for collecting dividend from Indian company, rupees 500. Compute his gross total income for the assessment year 2020-21. So now let us look into this problem here. So computation of gross total income, name of the assessee Mr. Jaganur, previous year 2019-20, assessment year 2020-21. Let me insert the columns here. So we need 5 columns. Particulars, inter-source set off, inter-head, carry forward, GTI. So now first let us discuss here. Income from LOP is given as rupees 1,50,000, and we have got a loss from SOP for this year, as well as there is a brought forward loss from SOP. So while we are adjusting the losses here, first we should adjust the brought forward loss, because it can be carried forward for a maximum of only 8 assessment years. So that's why here first we should adjust the loss from SOP, which is brought forward from the previous year 17-18 against rupees 1,50,000. Still there will be income from LOP of rupees 60,000, against which we can adjust a loss from SOP of rupees 75,000. There will be still loss from SOP of this year of rupees 15,000. Then income from profession is given as rupees 2 lakhs, against which we can adjust unabsorbed depreciation brought forward from the previous year 2014-15. So against rupees 2 lakhs, this unabsorbed depreciation of rupees 50,000 is adjusted. Then still there will be income from profession of rupees 1,50,000, against which the remaining loss from house property of the current year, that is 15,000, can be easily adjusted. Then there will be income from business of rupees 1,35,000. Then there is income from long-term capital asset, that is rupees 30,000, but we have got a short-term capital loss of rupees 40,000. So we can adjust to the extent of 30,000, and the remaining short-term capital loss can be carried forward to the next assessment year, and it cannot be adjusted against income from business, though we have sufficient income. Then winnings from lotteries, we are given the gross, so directly we can take it to the GTA column. Similarly the card games also. Then loss from interest on securities. So still there is a income from profession of rupees 1,35,000, against which we can adjust this loss from interest on securities of rupees 25,000. So there will be income from profession of rupees 1,10,000. This dividend from Indian company is totally exempt from the tax. Then the bank charges for collecting dividend from Indian company, so as they are incurred against the exempted income, so it should not be considered here. So now let us work out this problem here. So first one, income from house property. So there is income from LOP less set off of brought forward, I write in short BFD, brought forward loss from SOP, then less set off of loss from SOP. So now let's put the values here. So the income from LOP is given as rupees 1,50,000 here. So 1,50,000, against which we can make adjustment of the brought forward loss. You can just see here we have given rupees 90,000. So this 90,000 can be adjusted. Then let me underline here. So now there will be income from LOP of rupees 60,000. So against which we can make adjustment of 75,000 loss for the current previous year. So let us underline here the difference here, that is rupees 15,000 here. So this, let me write here, this is loss from house property, in the bracket let write SOP. This is of the current year's loss, please do remember here. So this we shall take it to interhead adjustment here. So 15,000 here. Then the next one here, income from business, sorry, profession it is. So we have got income from profession. Against this here, let us adjust unabsorbed depreciation. So now let's put the values here. So the income from profession, which is given the problem as rupees 2 lakhs here. So against this 2 lakhs, we can adjust the unabsorbed depreciation of which is brought forward from the previous year 14-15 to the extent of rupees 50,000 here. So when it is adjusted here, still there will be income from profession by rupees 1,50,000. This can be taken here. So 1,50,000. So still there will be income from profession of rupees 1,35,000 here. That is minus 15,000 plus 1,50,000, which comes to here 1,35,000. So now here let's write here income from profession here. Now let us go for capital gains here. So under capital gains here, we have got a long-term capital gain, that is income we have given as income from long-term capital asset, that is long-term capital gain, against which we can make adjustment of, so set off of short-term capital gain, capital loss, sorry. So now let's put the values here. The long-term capital gain, which is given in the problem as rupees 30,000 here. So 30,000, against which we can make adjustment of this 40,000 loss. So still there will be, so now let me underline here. So this remaining 10,000 loss, that which is a short-term capital loss, so 10,000 short-term cap loss, which shall be adjusted against income from business here. 10,000 here. So now let me underline here. So still there is income from business of rupees 1,25,000 here. So this is income from profession. Let me write down here. This is short-term capital gain. Yeah, short-term capital gain loss, short-term capital loss. Let me take this one step here. less set off of short-term capital loss. So the difference here is income from profession. So now the next head here is income from other sources. So here first we shall take that is loss on interest on securities set off. So here against this 1,25,000 we can make adjustment of this loss of rupees 25,000 here. So 25,000. So still there will be income from profession of rupees 1 lakh. This is underlined here. So 1 lakh. This is income from profession that we can take it to GTI column. So let me take a write in the GTI column also rupees 1 lakh here. Then we have got under the head income from other source, we have got winnings from lotteries. Then we have got winnings from card games. Then we can take directly to GTA column as they are casual incomes. So winnings from lottery gross is given as rupees 50,000 here. So 50,000. Then similarly we have given card games rupees 20,000. 20,000. So now let's take the total here. Dividend from Indian company is exempt from the tax here. So in case of oh sorry, we committed a mistake here. This loss cannot be adjusted here. So this is short-term capital loss. Sorry, this 10,000 will be taken here. It will be carried forward. $10,000. So here this income from profession so this is 1,35,000 that we can take it to so income from business, it is 1,35,000. Now we should so there will no here, this we should remove here. Similarly oh sorry we have got loss. 1 minute, there's something mistake has happened here. So against this 1,35,000 we can adjust this loss from interest on securities. So it is 25,000 here. 25,000. Then let's remove this one here. So let me underline this one. Difference here is 1,10,000. This is income from profession. Income from profession. So we will take here so 1,10,000. So this is 1,10,000. So the total will be now the loss to be carried forward. Let me put in this as a bracket here. So the total loss to be carried here is rupees 10,000. The total of the GTI will be 1,10,000 plus 50, total 1,80,000. Now let us give notes here. Any loss cannot be adjusted against income from or any loss against be adjusted against casual incomes, then short-term capital loss cannot be adjusted or cannot be set off against other heads of incomes. Dividend from Indian company is exempted under section 10 subsection 34, and hence collection charges incurred for collecting the same is not deductible. Loss from SOP, let me write here remaining loss, okay? Remaining loss from SOP can be adjusted against income from profession, and similarly loss from interest on securities can be adjusted against the same. So let me make these things bold here. So this is income from profession. Let me make this as a bold. This is short-term capital loss, which is to be carried forward here. Then income from other sources, heading here. This will be bold here. 1,35,000. Then this is the head: income from profession, income from house property, this is centrally aligned here. This is how we need to carry out the computation here. Thank you for watching this.